Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome to another edition of Premium Cashflow Podcast. Today, I'm delighted to welcome Holly Williams with Keep More to our podcast. I appreciate your time, Holly. Thank you for coming on.
So great to be here. Thank you for having me. It's a beautiful day.
Wonderful.
In the background and behind the curtain.
I know with COVID period, we are living through it, right? So
we are in it, man.
Absolutely. For folks who won't know, Holly is experienced and a veteran in a multifamily industry. She has her prior advertising career. She has spent 25 years building her career in the advertising industry before getting into multifamily real estate. Holly owns several multifamily properties within New York, Texas, Ohio, and Mississippi. She is currently retired, and she has been within the multifamily industry for over 20 years now, and she has over 20 communities and over 4,500 doors. That's 4,000. Absolutely. I mean, that's an incredible resume. She is also the author of famous book, Hidden Investing, What the Wealthiest 1% Know That We Don't. Amazing title and amazing insights from Holly. So thank you for taking time, Holly. I greatly appreciate it. In your own words, give us a brief background from you, and let's get it going.
Well, I mean, first and foremost, I'm an investor who had a career, a real job, and was all over the place, and I'm from Texas originally, and had the opportunity in 1990 to move up to New York and work in advertising and market research. And so that's what I did. And along the way, I bought a Manhattan apartment. I, read Rich Dad, Poor Dad, all of those things. But all of that takes a lot of time, and it's very hard to scale.
Absolutely.
While you have a full-time thing. And then life got really busy. I had a daughter and got married, not in that order. And, what happened to me was that I had an opportunity to invest in a multifamily syndication, and I didn't know much about it, but I trusted and knew the people that were running it. And so I did. And so one thing, and that was 2013, something like that. Mm-hmm. And at the same time, 2 years prior, I had lost both of my parents, not at the same time, but over a period of a couple of years. And I watched them have to withdraw money from their 401ks to live. Mm-hmm. And and they died broke. And then it began to dawn on me, seeing it firsthand, that when you withdraw money, we're all taught to put the 401k and blah, blah. And in our heads, we think, oh, well, if we have $1 million, if the stock market returns 8 to 10%, then we're going to have $80,000 to $100,000 in income or whatever for every million we have in the 401k. But that's not how it works. And so I watched my parents experience that and basically die broke. And then I realized that, hey, the entire system is designed for us to die broke. I mean, that's what every financial calculator asks you. How long do you want to be retired? Like, how long do you want to live?
Sure.
We'll tell you how much you can spend. It's crazy. So I, began to search for a better way at the same time, and had this opportunity. And I just didn't realize that you could go together with a lot of your people that right? Because it's sort of a club.
Absolutely. It takes a lot of people to do the big deals, typically. So help us understand, Holly, what was your first investment like, and how did you kind of arrive at the large multifamily as we come to know now? And what were some of your early lessons as you got started within the large multifamily properties?
Well, so the big lesson, I mean, I've learned a lot, so it's a loaded question, but the first time I was a passive investor with a guy that we may have heard of named Joe Fairless, who
Sure. Mm-hmm.
I knew from Texas and knew from the advertising business. So I knew him early on. And so when he found this apartment complex, he was looking for investors, and so I invested with him, mostly because I knew him. And, you know, we all learned a lot with that deal, right?
Sure. Mm-hmm.
But I learned essentially how it works, the fact that, you know, you can buy cash flowing apartments. And I learned too that it's very important to have a solid team, that it's tough to do this with even just a few people, and that you need to have a team on the ground too, that like really knows that market, at least some people on the team, right?
Sure.
And so I think that that's probably one of the lessons that I learned. And then the second lesson I learned was this is not about raising money. This is not about, I mean, it is about executing a business plan.
Couldn't agree more.
That's right. This is, and so people think, oh, it's about raising money, or, oh, it's finding a deal, or, oh, no, the hard work starts when you get it. And so it really takes a lot of eyeballs keeping track of this stuff. And so I found that out. Right. And, you know, I could tell lots of stories.
Awesome. No, and you're absolutely right. I think it takes such a, experienced team knowing the nuances of the business, and also the game of efficiency, as we call it, like where can we improve, whether that's operations or, you know, physical improvements. Correct. And things like that. And the word that you said is execution of the business plan. That's phenomenally important, that once you take it over, you got to run with it. You have to know all of it and do the correct thing. Now, help us understand.
It's a long-term deal. I mean, this is like 5-7 years.
Sure.
I mean, you're really in it.
Absolutely. And how did you kind of marry your sort of your advertising background, Holly, and the folks you knew at the time? How did you kind of educate them and bring them in your sort of network and spread the word and bring them along with you?
Well, what happened was that really happened organically. Just by me getting excited about what I was doing. And when I'm excited about something, forget it. You know, I don't shut up about it, right?
Sure.
And it was interesting. One of my clients in advertising, I knew it was time to probably pivot to doing this full time, when one of my clients in advertising said, "This is great, Holly. Whatever. I don't want to know really about what you're doing now. I'm already a client, whatever. I want to know about this real estate stuff." And I hear that you're doing. And so it's really been sort of people coming to me and being able to help people that I care about.
Sure.
You know, all the way from my brother to colleagues in the advertising business, because if you don't grow up in this world, I mean, this is how the wealthy invest. We're buying these from hedge funds and from REITs and all kinds of big organizations that
Sure.
have lots of people and lots of expenses. And what we're able to do as entrepreneurs is come in with a group and work together and share those profits. And when you're not buying buildings in Manhattan and paying, you know, $600,000 salaries plus bonuses, you can do a lot, and you can return a lot of that.
Sure.
So it's been very eye-opening to me, and so that it's really simple what we're doing. It's something that people have not ever heard of. So
That's true. That's true. And I'm glad you wrote the book. I think we will talk about it, definitely about the book as well. But now when you go to investors, Holly, and you're sharing, like, let's say the benefits of multifamily or various growing submarkets and things like that, what kind of you tell them? Like, let's say if a deal comes to you, right? How do you kind of convince the investors? What does that conversation look like for you?
well, it's a lot of listening. The conversation really doesn't. I mean, if they understand it and the timing is right,
Mm-hmm.
people will invest in it. I
Sure.
mean, it's really more of getting to know those investors, because
Sure.
really have to, again, you're in it for 3, 5, 7 years, and most of them are people that I know anyway, right?
Sure.
And
Mm-hmm.
or they've heard about me from somebody else I know, right?
Sure.
And so it's important for me to get to know them and what they're trying to do. I mean, you can invest in a lot of ways,
Sure.
and this isn't for everybody, right? I have a lot of friends that are like angel investors, right?
Mm-hmm.
And they live out, some of them live out in Silicon Valley, and what they like to do is invest in 10 companies, and 9 of them lose and 1 of them hits, and they want to get on the board, and this is very, very pedestrian to them.
I see.
Very simple. We buy an apartment complex, people pay a rent, and then we collect the rent and we pay the expenses and we manage it wonderfully and add value to the asset as we go along, and then we all share in the profits.
Absolutely, absolutely. Now you came up with the book, Holly, Hidden Investing. What the wealthiest 1% know that we don't. I mean, I absolutely love that title. It just says such a lot into it, right? Can you maybe describe how you kind of taken what you know, and how did that idea for the book came about? I'd love to hear about it.
Well, the idea is just the fact that I was in my late middle age, let's say, and I didn't know any of this. I thought I was an accredited investor for years and didn't know what that was.
Sure.
And
Mm-hmm.
when I began to talk to my friends and family, I realized that they didn't know either,
Mm-hmm.
and that they were buying annuities at 4%. I mean, all of we have little to no financial education in this country, even though I went to business school, but I learned about stocks,
Mm-hmm.
about the stock market. I learned
Sure.
about, and I didn't really learn that well because it was really, so I didn't realize that Goldman Sachs, for instance, has a wealth management division that you need a $30 million net worth to even learn about, and that 10 million of it needed to be liquid.
Mm-hmm.
And then Goldman Sachs takes that money and they go invest in multifamily real estate, stuff like that, right?
Sure, sure.
And oil wells and businesses and life insurance and all of this stuff. And so we give our money to the bank.
Sure. Mm-hmm.
And when we think, oh, well, we're getting interest, well, we're really not. But
Mm-hmm.
what they're doing is investing in multifamily, or they're loaning out their money to others. And so I entered this world of, oh my goodness, this is what the wealthy do.
Right. Mm-hmm.
And if you didn't grow up, I grew up with the 1040 EZ right out of college.
Sure, sure. Mm-hmm.
I didn't know. And then I bumbled around and did okay and got to where I was paying 50% of my income in taxes.
Wow.
Mm-hmm. About all these other people that don't pay taxes. And you're like, what is the deal here? How does Warren Buffett do it? Well, Warren Buffett, you've heard him say it. It's not secret. It's hidden.
Mm-hmm.
We don't hear him. What
Right.
he's saying, he's telling us that his secretary pays higher tax rates than he does. He's telling us that it's not right. But, our tax code is designed for us to pay, incentivizes us to do things.
Sure.
One of the things that the tax code incentivizes us to do is to buy real estate. one easy way to buy real estate is to invest in real estate passively, but you
Sure.
have to know the people that are doing it because it's not advertised.
Right.
So if
And
you're
you're
not in
absolutely
that
right.
world, you don't know about it.
Correct. And there are specific laws, as we talk about all the time, that perhaps sometimes are designed so that it has to be kept within your network. So it's kind of a double-edged sword that although you want to tell more people, but there are laws against, you
Correct.
cannot just suddenly go to, like, let's say, social media or the billboard or the radio and all that, and you cannot suddenly start to advertise. And with 506C, as we call it, that recently started to change, which is a slightly different dynamic. But for the longest time, you couldn't sort of broadcast or advertise these deals.
And
So
I've never broadcast them, right?
right.
But I tell my story, right? And I think that's okay.
Right.
Because I don't have a deal right now anyway. If somebody wanted to invest with me, they couldn't.
Sure.
And they usually don't do that anyway until we get to know each other. So
Absolutely. Now, Holly, speaking of, we have, let's say, your passive investors on one side, and you obviously have the sponsors, the operators, as we call it, which are, actively kind of looking at different deals and kind of coming up with some good opportunities every now and then. How have you kind of establish those relations and grown your network so that on one side you have the passive investors and on the other side you have the sponsors kind of coming up with deals, and then we are all kind of as a team coming together? Sure. And giving big returns to the investors? Can you maybe speak to that?
Sure. Well, the first thing that I do is invest. So like I've only worked with 3 or 4 lead sponsors. Sure. Anyway, and they've all been sort of in the same orbit as that I travel in, right? And sure. And I've gotten, first of all, I usually invest and I get to know the people, and I get to know how they deal with their investors, and are they really like-minded, and are they as conservative as I am? Because there are tons of people that I really, really respect and like and would love to work with, but like student housing, I don't know much about that.
Sure.
And so I don't, I don't do student housing, not right now, and I would have to do a whole lot of work before I started to do that.
Sure.
So there's lots of things like that. So there's many different, there's philosophies, right? Some people I know are doing ground up construction, and you can make great money.
Sure.
It's hard to, so I have criteria. So I want to understand and make sure that the people on the ground are in my lane.
Sure.
You will. And then I get involved with them, and I get involved people call me sometimes and say, I have a deal, I need to raise money, and I don't even touch that. Sure. And although I'll look at the deal and help them if they want, not help them raise money, but tell them, this is what I would do, and this is why it's a good deal and why it's not a good deal, or whatever. Sure. Hopefully they'll send me that before they close on it, but I get involved before we even,
sure.
We get best and final, maybe even before that. So
I see. Got it.
And help put the story together, right?
Right. Absolutely. And as you rightfully said that, the different markets, the value add has to be there, how you can grow it and all that. And it's a process, as you rightfully said, that you get involved up front, you're doing all the financial due diligence, you're seeing, how the asset looks like. And as you pointed out as well, that, there has to be a proper sort of path or a story as to how we are going to see the returns. It has to be tangible, right? And that's how you make it work. It isn't like a rocket science or anything like that. It's just a pure business plan, as we alluded to. And which are the markets currently you like, Holly? Like what is your typical favorite markets you like to invest?
No, so jobs.
Sure.
And landlord friendly and frankly tax friendly. So the market has to be growing. I know people, and I've made money in the Northeast, and I know people that are buying multifamily in the North where I am right now. And I'm just not, I just don't, that's not my thing right now. And markets that I know, you can take the girl out of the country, but you can't always take the country out of the girl.
That's interesting.
So, I grew up in Texas.
Sure.
And grew up in Houston. And so I like Houston. I like Dallas even better. Lots of, I lived in Dallas after college, and my brother, and when I was little also. So markets that I know. I lived in North Carolina for a couple of years, in between Texas and New York. And so I like places that I know and people that I trust and know.
Sure.
So, that doesn't hurt at all. That doesn't mean that you can't do this anywhere. It's just, that's kind of where my comfort zone is.
Absolutely. Mm-hmm.
And Jacksonville, Florida, I like, so there are lots of good places in the country, and that can change, but it's really where the jobs are.
Couldn't agree more.
Lots of different industries as well.
Absolutely. Absolutely.
It works. People aren't saying, "Oh, I'm going to move my company to New York." It's just not what's happening. They're moving out of here.
True.
That to me is not the right trend for the long haul, right?
Sure. And I agree with you. It's all about jobs bring in people, and obviously with more people coming in, businesses coming in, you have the direct job, you have the indirect job. And obviously that's how, the demand increases. That's how we get kind of the organic rent increase, as we call it.
Right.
And I absolutely agree with you. And that's what I think boosts your sort of the net operating income, or the NOI, as we kind of call it. And that's the base. And you rightfully said that it's all about jobs and how that migration is looking like. Is the economy diverse enough that, let's say, if the one company goes belly up, are there, a bunch of other industries, whether it's healthcare, industrial, and things like that will support the economy, right?
And that's market research, right? And
sure.
It's all about populations and what people do.
Sure.
How they think, what makes them do what they do, what makes them buy where they buy, what makes them move where they move. And so this is what to me was a natural extension, because it's about how people are living their lives, and they're not, even COVID has dramatically changed some things about how people are living.
Absolutely.
It's really interesting where I'm sitting. I'm sitting about 90 miles north of New York City right now, and houses where I am, I'm so grateful to have this place, because houses are staying on the market for like a day.
Wow.
Because people from the city are wanting to get out of the city and have a place out. It's very, very interesting what's happened. Same thing happened after 9/11. And so everything's sort of cyclical. And right now, I think we're in a cycle where this is just not the place to be. And
sure.
And even outside of the big. Even outside of Dallas, right? Not downtown, it's sort of the places where large companies are moving. It's spread out. So
absolutely. And as experienced as you are, Holly, you have seen the previous 2008 downturn at the time, right? And we are going through another downturn as we record this, right? It's kind of interesting that 2008 was a financial crash, as we call it. And as 2020 began, nobody knew the pandemic word, or the COVID word for that matter. But now here we are, the whole, sort of world is, living through it, right? And I want to preface this by saying also is that this pandemic is so huge, and it has affected, pretty much Main Street across the board, right? And if we take lessons from 2008 and now kind of fast forward into 2020 here now, we are much more deeper into, let's say, whether it's the stimulus or the job losses and things like that, right? What is your take, like, in terms of what some things you're thinking that perhaps maybe quite real for the coming year or two? I mean, are we, like a lot of people are talking about, let's say, the V-shaped recovery and things like that? Could you maybe perhaps give us some of the philosophies or some past experiences and how you're kind of looking forward through this?
Yeah. So I knew, and I wasn't the only one that knew, I knew that this was going to crash.
Mm-hmm.
I didn't know we were going to have a global pandemic,
Mm-hmm.
but I knew that we were going to have a correction, and I knew, and I can guarantee you that this is going to get better, because that's what the universe does.
Uh-huh.
It's going to grow, and there will be a time, I don't know when, but there will be a time when things are booming and everybody's happy, and I can guarantee you that's going to happen, and I can guarantee you that it's going to crash again.
Sure. Mm-hmm.
Right? And
It is cyclical, absolutely.
Yeah, and so I'm an optimist, but I also want to plan for the worst case scenario. So
Sure. Mm-hmm.
thankfully, we really had, in all the deals that I'm in, we've pretty much done that, right?
Mm-hmm.
So
Sure. Mm-hmm.
we buy things that are, and people in the Northeast don't understand very well about cash flow necessarily. They think that
Sure.
cash flow is maybe like the rents that you're getting, right? They don't
Right.
understand that cash flow is really after all the expenses, what's left over,
Sure. Mm-hmm.
and that you can really cash flow real estate.
Right.
It's tough to do it in markets like New York and California, San Francisco, LA. It's
Sure.
very hard to do that. But you can do it in places like Dallas, and you can do it easier with a big multifamily real estate asset, much easier than you can with a single family home.
Absolutely.
If you've got 200 units and you lose a tenant, that's not the end of the world.
Sure.
Mm-hmm. Single family home. So it's a different kind of mentality. So to insulate, I only look at, cash flowing 90% or above assets, and that really can have room, right? So if it's 90% occupied now, the last deal that we did, for instance, it was around COVID, right? But
sure.
96% occupied, and we stress tested that, and occupancy can drop to 55%.
Wow.
In that asset before we can't pay the bills.
Absolutely. Now, that's strong, very strong.
So that means that now investors aren't going to get, but we'll make that up because it's going to rise again, right?
Sure.
So if you can invest in cash flowing real estate, what happened in 2008 was that people got stuck with an asset that wasn't cash flowing, that wasn't, and they couldn't they were in a loan that they had to get out of at the wrong time.
Sure.
So we've been getting fixed loans for 5-10 years. It should be twice what the business plan is, right? So
sure.
Have some wiggle room, and very, very conservative. Now, not everybody does that.
Right.
And that's just what I do, right?
Absolutely.
And so it's capital preservation first, and then cash flow. And then if the market appreciates, all the better.
Sure. I love your insights, Holly. I think you have a very interesting sense of, throwing in philosophies and sort of those keywords into your commentary. And I mean, it's great listening to your experience, actually, So I appreciate your time, Holly. Share with our audience how they can, kind of find you and learn more about your company.
Well, sure. So I'm at keepmore.com. My book is called Hidden Investing, and you can get a special deal at hiddeninvesting.com/book. If you go right there, there's a place that you can buy. You could go directly to Amazon, but it's better to go to hiddeninvesting.com/book.
Sure. We will link that in the show notes for sure.
Yeah. And you can book a call with me. I'd love to chat and try to help any way I can. So
Absolutely, absolutely. I mean, you're a wealth of knowledge and experience, Holly, as I have, continued to know you and interacted with you now many times. So it's been a pleasure. Thank you for your time, and thank you for coming on to the podcast today.
Thank you. It's been lots of fun.
Thank you so
Here,
much,
stay
Holly.
healthy.
Absolutely. Thank you so much.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.